Mode.
Hello everyone, and welcome to today's webinar on obtaining an excellent bank rating. I'm glad everybody is able to attend the webinar today. I could pretty much assure everybody that it's going to be a very enlightening day, because today at the end of the webinar what you're going to know is what a bank rating is. Until I got into business credit, I never knew that a business had kind of its own business credit score that only banks saw. I didn't know that. I didn't know that banks had their internal rating system, and that internal rating system ultimately determined whether a business would be approved or denied financing. And that's what bank ratings are. And today, that's what we're going to jump into. We're going to talk about what bank ratings are, how banks rate a business, the scale that they rate them on, what you need to do to get an exceptional business bank rating. And in doing so, what you'll find and what you're about to uncover is that bank ratings are the secret behind getting approved for banking. If you have a good high bank rating, you're probably going to get a loan. And if you don't, you probably won't. So a lot of your approval or denial determination from a lender comes down to what your bank rating is. So before we jump in, let me first introduce myself. If you haven't heard from me before or attended one of my webinars, my name is Ty Crandall, the Director of Business Credit Services here at CreditSuite. I've got about a 14-year history in finance, spent the last 4 years running a credit repair office from the ground up. I built a credit repair company, sold it, made a lot of money, and in large part due to my success with business credit. When I incorporated business credit with our other services, we did very, very well. And I ended up selling the business last year. Since then, in large part due to my success with business credit, my very good friend Michael Citron brought me in here to CreditSuite to run and head up the business credit division here. So this is where I've been now for over a year. There's a little bit of a history about me. I've got a couple very popular published books on business credit, personal credit, some other things, blah, blah. I won't bore you with details. That being said, I just wanted to kind of give you a little bit of introduction to who I am if you're not familiar with who I am, if you haven't already attended a webinar. Now, let's jump into the topic at hand. What we're going to do here is we're going to spend about half of this webinar today actually going through bank ratings. Then we're going to spend some time at the end going through the actual funding suite, and I want to show you something in our credit suite that I've never shown before ever to anyone, never shown on a webinar, never shown on presentations, which is how you could actually build a bank rating right through our system. So we'll dive into that after, but first let's get into some details. Let's talk about what these bank ratings are, how they work, get you a little bit more exposure to them. So a business bank account, obviously you're familiar with. It's an essential part. It's essential that any business owner separates their personal and business banking. If you own a business, you really shouldn't be using your personal bank account. It's really essential that you open a business bank account. Okay, it's really critical in having any kind of successful business, because what you'll realize is a lot of people only need to deposit into a business account, and a lot of people only lend you money or even begin the business credit building process only if you have a business bank account. As a matter of fact, a lot of in lending, they look at the date of your business bank account being opened as the date of your corporation being opened. So that means if you open your business bank account today, even if your corporation's been open for 10 years, a lot of lenders look at your business just opened today. So you really want to have a business bank account. It's really crucial in helping you run a successful business. And one of the major financial tools to do that, of course, is a business bank account. A business bank account helps maintain accurate records for the business, prepares reports, deposits, withdrawals, wire transfers, issues checks. All those things can be done through an actual business bank account. Okay, now whether a business owner decides to open an account at a national, regional, local bank, you really want to focus on a bank that best caters to your individual needs. This is becoming more and more easy nowadays. There's so many different kinds of banks popping up, and they all specialize in different things, that you really want to try to stick with a bank that is close and offers services that you're going to need. And you're going to see why here in a minute, why that's so important. Now, while every bank offers various types of financial products, each serving a specific need, one thing remains the same: bank credit. Meaning that a lot of these different bank institutions now, they have different niches, different strengths. Some are good with business, some are better good with personal. But the one thing that they all consistently have, but you may never know about it, they'll never tell you about it is bank credit. It's the one thing that's completely consistent in the banking industry. Now, bank credit is the total amount of borrowing capacity that a business can obtain from the actual banking system. It's not the same as business credit, okay, because business credit's a much broader scope. It looks at suppliers, credit card issuers, leasing companies. With bank credit, you're only dealing with bank financing. It's one of the biggest differences between bank credit and actual business credit. Now, a business can secure more business credit quickly as long as it has a minimum of one bank reference and an average daily account of at least $10,000 for the past 3 months. Okay, when you're building business credit, this is what a lot of them love to see. They want to see that you've had a bank open or that you have a reference from a bank indicating that you have a bank account open, and they really want to see you have a high of balance as possible in your accounts, as high as $10,000 or higher, okay, in the last 3 months. And you're going to get a little bit more detail here in just a few minutes. But this yields a bank rating of a low 5, okay, meaning an ADB, which is average daily balance of $5,000 to $30,000. Okay, that's what a low 5 means. We're going to get into some more specifics in this in just a minute. Okay, so the goal is to get a bank rating of 5, at least the lowest of which is a low 5. We'll talk about the ratings in just a minute. Now, a lower rating, such as a high 4 or balance of 7 to 9,900, won't stop a business application. It means it won't mean that you're denied, but it's going to slow down the approval process. So if you have a high 4 rating with a bank instead of a low 5, it could literally mean the difference between being approved or denied. Even if you are approved, it will definitely delay your application from being approved. Now, again, just hold on. We're going to jump in and look at exactly a breakdown of these bank ratings here in just a few minutes. Okay, the rating is the average minimum balance maintained in the business bank account over a 3-month period. This isn't the only factor that ties into a bank rating, but it's the main factor. The main factor that affects your bank rating is right here. The rating is the average minimum balance maintained in your bank account over a last 3-month time period. Okay, a $10,000 balance will rate a low 5, $5,000 rates as a mid 4, $999 balance rates as a high 3, and so on. Okay, now, the main goal should be to maintain a minimum of a low 5 bank rating, about $10,000 for at least 3 months in your bank account. Unfortunately, without at least a low 5, most banks will assume that the business has little ability to repay a loan or a line of credit. Look, the reality with bank credit is this. You get out of 5 and you get down into a 4 level, you're going to have problems. Now, maybe you're a high 4, and maybe your application will get approved but just take a little bit longer. But the bottom line is, if your business has a bank rating of lower than 5, it's going to be very tough to get approved for any kind of bank loans, any kind of actual bank financing. So I made a scale here. Actually, I don't think you'll ever see this, okay, because it's very difficult. If you go to Google right now and type in bank ratings, you'll see there's not a lot of information out there about it at all, let alone the actual scale that they're based on. And I didn't go all the way down, but I went through 5 and 4 because this, if you're lower than this, you're pretty much not going to get bank financing. So this is what the bank ratings actually mean. You're actually looking at the actual breakdown. A high 5 account typically has a balance of $70,000 to almost $100,000. Remember, this is an average daily balance over the course of about a 3-month period. A mid 5 account has a balance of about $40,000 to $69,900. Okay, so about $40,000 to $70,000 is kept in an account on average balance for somebody that has a mid 4, somebody that has a low or high, mid 5, somebody that has a low 5 carries a balance of $10,000 to $39,000 in their account. That's why so far, and you will continue to hear me reference, that you really should have an average daily balance of about $10,000 in the account, because that will give you a 5. That keeps you in the 5 bank rating. If you have less than $10,000 average balance over 3 months, you drop to a high 4. That's a $7,000 to $9,999 average balance. A mid 4 is $4,000 to $69,999, and a low 4 is about $1,000 to $3,999 a month on the actual bank account. So this is what you're looking for. You want to be a 5. You really want to be a 5. If you're a 5, you're going to have a pretty good chance of getting approved. You drop down to a high 4, meaning that you carry a 7,000 to about 10,000 balance. Maybe you'll get approved depending on what it is you're looking to apply for. And if you're down in the mid 4s, meaning you're carrying a balance less than $4,000, look, here's the reality. It's really, really tough to get approved for bank financing at that point. So that means to get bank loans, to get bank financing, you really want to have a high bank rating of 5 or higher. And to do so, you really need to focus on maintaining as high a balance as possible, preferably over 10,000. Now, business owners need to do whatever they can do to put 10,000 in the account over 90 days. Okay, and the money should be kept there just to ensure the bank rating is high enough to increase future financing approvals. Now, each cycle is based on the balance rating during the previous 3 months. Okay, so January, February, March. Boom, here's your rating. Now all of a sudden you have a $10,000 deposit and that money's in there April, May, June. Well, your bank rating for those 3 months is going to be 5. So if your bank rating right now is low, don't worry about it. It's not like a credit score that takes years to get up. You just do the right things, and all of a sudden in the next 3-month cycle, that bank rating could be high 5 for that matter. Okay, so each cycle is based on the balance rating during that previous 3-month time period. So before you decide to apply for credit, it should keep a balance rating of a low 5 for the past 3 months. You know, my wife and I are going to go get a car this year, a new car. And one of my buddies owns a consumer finance company. And every time we go to get a new car, I go get money from him and have him report it on the bureaus because he reports it as an auto trade line, okay? And I understand credit scoring. I understand auto credit scoring. And I know about another year of an additional auto loan paid as agreed radically increases our auto credit scores. So we always do this. The year before we go to get an auto loan, we'll always make sure we go to him, we get an extra auto loan put on our credit just to go ahead and raise our auto credit scores. That's exactly what you should do for your business. If you're thinking about going out and applying for a bank loan or getting money from the bank, then 3 months ahead of time, you need to start focusing on this bank rating. You need to know it, you need to understand it, and you need to plan accordingly. You know, so go in and put the money in your bank, borrow it. I don't care what you do. Just get as much money in there as possible and leave it in there a few months before you actually go to get a loan. That way your bank rating is as high as possible before you actually go in to apply. Okay, now it's also essential that the business owner ensures that their business bank accounts are reported exactly the way all their business records are, with the exact same physical address. It's very important. Okay, bank ratings do take this into account. So you've got to make sure that your address with everything to do with your bank account is the same as your corporation papers, the same as your licensing, the same as all the pertinent licensing and those type of requirements for your business. Now, it's vitally important that every credit agency and trade account vendor, every record keeper, okay, also lists the business name and address the same way. We talk about this pretty heavily when we talk about building business credit. Okay, and I talk about it in bank ratings because it's just as important. And people don't realize it. You just don't think about it. You know, you change your address, you don't think about it being changed on everything. But they look for this a lot in lending. It's a big factor they look at is consistency, meaning does your business name and address, is it the same on your bank statements, on your licensing, on your corporation papers? Is it the same on your electric bill, your phone bill? They really want all that to be uniform. It really has a lot to do with business credit, bank ratings, so make sure that you do that. No lender is going to stop to consider all the ways a business might be listed. Okay, and this is another factor. So when they look into your business's creditworthiness, you know, and you put your business as ABC Company, but your real name is ABC123 Corporation Company, well, they're not going to know that. They're not going to go digging for your information. So you need to make sure it's all uniform so when they go to look up your actual business, they can find your business. They won't keep looking for it. Okay, if they try to look up your business and can't find it, they'll just deny you. They'll just turn you down. You don't want that to happen. So you need to make sure your name, your address is consistent on all those different things. Okay, it's also essential that a business manages its bank account responsibly. Okay, that means a business should avoid writing NSF checks at all costs. I mean, it absolutely destroys bank ratings. This is a major factor in bank ratings. given the biggest factor is your average balance over 3 months. Now what we're diving into is other factors that affect your bank rating, and one of those other factors is the amount of NSFs you have on your bank account. So you really want to reduce or eliminate any kind of NSFs that you have on the account. Okay, even if you have an overdraft protection, a savings account, something like that. Now, in business credit and in business funding, I'll tell you there's a popular funding product, one of our most popular, called revenue lending, where we can get people money just because they have cash flow through their business, just because they have revenue. Okay, and that one type of financing, even merchant advance financing, merchant card credit, those type of funding look at your bank statements for NSFs too. So not only will NSFs destroy your bank ratings, okay, but NSFs will also completely eliminate you for certain funding programs that you might qualify for. So you've really got to make sure you eliminate the NSFs. It's also very important that a business show positive cash flow. One of the other, I'd say probably the second biggest factor that affects bank ratings. The cash coming in and going out of a company bank account should reflect a positive free cash flow. So positive free cash flow is the amount of revenue left over after the company's paid all of its expenses. So when the account shows positive cash flow, it indicates that the business is generating more revenue than is used to run the company. Okay, let me give you an example. So what I'm talking about here is pretty simple. You need to have more deposits than withdrawals. You need to be putting in more than you're taking out. And that means they need to see that bank balance growing every month. Okay, if this month you did $10,000 in business, in money through your business, through your bank account, that's great. And hopefully you left $2,000 in there, left over. They want to see that with every month as you're paying bills and bringing in revenue and paying bills, that you have money left over. Okay, that you're generating enough revenue to become profitable and to put, create positive cash flow into your account. It's a very big factor. So remember, as you're taking money out each month, make sure that you're always having more in deposited and keep letting the surplus of money in your account grow, because all of that ties in heavily to your actual bank rating. Now, it's important also to recognize that banks are motivated to lend to a business that has consistent deposits. So a business owner must also make regular deposits to maintain a positive bank rating. And it's vital that a business owner make a lot of consistent deposits, more than withdrawals that they're making, to have a good bank rating. Okay, so on top of cash flow, it's deposits. You can't just have $3,000 in the bank. Okay, man, I got to tell you, I'm guilty of that. Actually, I have an account right now for the company I sold last year. I've got 2 bank accounts open right now with money in them for accounts that I've closed. I just never, companies that I don't even own anymore. I have the accounts open because I want to be able to do business with that bank. I don't have personal accounts with Bank of America. So I like being able to, if I see a Bank of America need to do banking, be able to do so. So I leave my accounts open and I've got money in them. I just don't make any deposits because the businesses really they're not my businesses. I'm not doing anything with them. So it's the same thing. With this, you've got to make consistent deposits, because there are people like me that have these bank accounts that have high balances in them, but then again, there's no deposits. There's no cash flow going through the business. So cash flow, consistent deposits, these are other reasons that they look at for your bank rating, because they would want to make sure somebody just doesn't drop a bunch of money in the account and leave it and then just inevitably all the time have a high 5 rating because they have money in the bank. So that's why all these other factors come into it. It's not enough that you just have money in the bank account. You have to be having positive cash flow, putting in more money each month than you're taking out. You need to have consistent deposits, no NSFs. All these factors tie into that actual bank rating. Okay, so bank credit is not only based on monthly deposits, balance rating, and check history, but it also includes the actual age of your bank account. Okay, the bank products that the business actually uses, and any savings accounts or investments the business has. So this means if you have CDs, if you have any of these type of things with your bank, guess what? It helps your bank rating. So the longer you open your bank account, the better you are. That's why the minute you even think about starting a new business, you should open the bank account first. Okay, not first, but right after you open the corporation. See, in Florida, it's easy and cheap to set up corporations. It's $60 to set up a corporation. And I could go there right now to our website, sunbiz.org, and in about 3 to 5 minutes, I could have a new corporation set up. It's that fast, it's that easy. So because it's so cheap, it's so fast, it's so easy in states like Florida, I've got, I don't know, 20 corporations that I probably own right now because I think of an idea and I go get a corporation and start it. A lot of people do that. But then I may never do anything with the corporation. I've had a real estate corporation for like 9 years I've never done anything with. Okay, but the bottom line is if you look at my corporation, you'd see it's open 9 years. That's great. Okay, but a lot of lenders will then look at the bank account to see when it's open. Because guess what? I've never opened a bank account for that business. So even though you see a 9-year-old corporation, you'd see a brand new bank account. That's why when you first open a corporation, you want to turn around and open a bank account with it. Because a lot of lending and even bank credit and bank ratings, all of this stuff looks at the age of that account. It's very important. The bank products the business uses. Remember in the very beginning where I told you it was really important that you worked with a bank that had services that you would probably use and would cater to you and was kind of more of a niche along the type of business you have? This is why. Because those kind of banks can offer you additional products, they can offer you additional services, they can offer you savings accounts, they can offer you CDs, they can offer you other different products with them that will also help your business but will also improve your bank credit and your bank rating. So age of bank account. A seasoned bank account shows stability and longevity in the eyes of the lender. Okay, keeping a healthy and long-standing relationship with a bank is also crucial for all companies. Okay, it's why you don't want to just shut your bank account down and go, get a bank account with somebody else because you don't like them. They're going to look at this, the seasoning of the bank account. Okay, so you want to keep a long-standing, healthy bank account. It's only going to help your business. A good, stable relationship with a bank that reflects longevity will be highly appreciated by lenders considering lending that business money. Bank products being used. Your bank rating will be higher the more bank programs you use, maintain, and pay as agreed. So having investment and savings accounts really help your bank rating. Having open loans, even open CDs, help your bank rating. So most banks offer these kind of programs. Look into them because they're only going to escalate and increase and help your actual bank rating. Savings and investment accounts. Bank ratings are higher the more banking, investment, and savings accounts you have. Interesting. A lot of people don't even have savings account for their business. They only have checking, right? Well, that's a problem for a couple different things. First, it doesn't help your bank rating if all you have is a checking. And second, if you have any overdrafts, if you overdraw the account, you don't have a savings account to prevent an NSF. So if you only have one account now, a checking account, I'm guilty. Okay, most of my businesses, I never opened savings account until I understood what bank ratings were. Then I started putting money into CDs and savings accounts. Hopefully you'll do the same thing. So now you really shouldn't have just a checking account open. You really want to have at least a savings account, at least a CD, things like that. It helps your bank rating because you have it, and it helps cover you if you link in overdraft protection to that extra account. Having high balances in those accounts further helps the bank rating, and making regular deposits into these accounts also helps your bank rating. Remember, same thing applies, right? Cash flow, deposits. So if you're cash flowing, you're putting deposits in these accounts, it's also only going to help improve your bank rating. Okay, so beyond just the bank rating, a business bank should also act as a trusted advisor that can assist in the growth. It helps a business to consider working with a financial institution that specializes in providing banking services tailored to their specific industry. The more services the bank offers that the business can take advantage of, the higher the bank rating is going to be, right? I mean, that's what we just talked about. We just talked about all these things that can raise your bank rating, and all of them have one thing in common. A bank that offers services, accounts that you're going to benefit from probably has all those. Okay, so if you go to a bank and find the right bank that fits your needs, that fits your niche, that works with your industry, okay, then it's going to be easier for you because you're going to be able to get more accounts open, more different kinds of accounts open, raise your bank rating, and have an even greater chance of securing money. Let me give you an example. When I owned the credit repair business, I had an account with Wachovia. I started putting some money in there. They shut my account down. I asked them why. They said because I was in credit repair. Okay, they saw my name that had credit in it. They assumed I was in credit repair, which I was, never denied that. I think I told them I was. And they said, we don't deal with credit repair. We don't deal with your whole industry, so we're terminating your account. It blew my mind, okay, and Wachovia is, not around anymore. Wells Fargo bought them out. But the bottom line is that's why you want to, work with a bank that fits your needs. Think about this. What if I put all my eggs in that basket? Now, the ironic thing is in this story is that was my backup bank account. I was afraid that my primary bank, Bank of America, would do the same thing, and I needed a backup. So I opened this account as my backup bank account just in case I ever had problems because of my industry with my primary bank. And then ironically, it's my secondary bank account that gets shut down because of my industry. But let's take a year step back. Let's take a 4-year step back. What if I would have been using that account for 2, 3, 4 years and they wouldn't have known I was in the credit industry, right? Then I go to apply for a loan or whatever, and they say, oh, sorry, we don't even lend to your industry. As a matter of fact, we're going to shut down your accounts because we don't deal with your industry at all. I would have built all this time, energy, and money building this relationship for years with Wachovia only to find out they don't even service my industry. Okay, it would have been a disaster. I would have lost all the clout that I built for those years. That's exactly why you want to work with a bank that focuses on your niche, your industry, because in doing so, then you're into a position where you can grow with the bank. The bank can grow with you. As your business gets better, you can put more money in it. You can get CDs. You can get other investments. When you go to get money, you have a better chance of getting approved because you have so much clout and such a high bank rating with that institution. Okay, so working with a lender that already understands the business is much easier to get a loan approved compared with other lenders, and that's because the majority of lenders have difficulty assessing the credit risk of most small businesses or small industries they don't know about. A good thing to say with this, and many banks have niches or industries they just work better with, is we're doing that with a merchant account. Merchant accounts have always looked at credit repair as high risk. So we took one and we sent them a bunch of business and we said, look, we're sick of this. We're sick of you saying that all of our credit repair clients are high risk. It's going to stop. It needs to stop now. So what do you need? What do you need from us to prove to you that credit repair is not a high risk? And we began the process of educating them on what the credit repair industry is, how it works, showing our clients actual merchant statements and the lack of chargebacks. We began the process of educating that lender on the credit repair industry because they were never educated. They were just always taught to say no. And that's why it's important, because a lot of lenders don't work with certain types of industries. Okay, and I used that example before with the credit repair, but the bottom line is they have a difficulty assessing the risk of these types of businesses. Let me give you another example. I opened a merchant account, okay, with my credit repair business. It was a secondary merchant account. And the owner of the company said, you're approved. Yeah, they looked at my merchant statement and said, you're done. You do thousands of transactions with no chargebacks. You're approved. Then I got to the risk guy. Oh my gosh. 70 hours of time putting together documents for this risk guy. They held $20,000 of our money for 2 months while they went through a review of our company, of everything to do with our business, just to approve us. Why? They weren't familiar with our industry. Come to find out, we were the first and only credit repair company they had ever approved. Now, given our merchant statements were ridiculously good, but we were the first they ever approved. And because we were the first, we had to go through this elongated, very frustrating process of getting approved because they had difficulty assessing the risk of our business because they weren't familiar with our industry. Look, it could be killer to your business if your bank isn't familiar with your industry. It really could be. So you really should try to target banks that focus and deal with your industry, because it's going to be much easier for you to get money with them just judging you based on how you do business instead of trying to learn your industry and judging you based on how you do your business. So, while profit and loss statements, tax returns, business credit, personal credit checks are common requirements in the lending process, it's much easier for a lender to underwrite the business financial risk when it truly understands and specializes in making loans to a company and industry they're familiar with. And that's just more of an elaborate explanation from what I just talked about. So let's take a look. And let's summarize, and then let me show you another little inside way to get a good bank rating. Okay, have a good bank rating is essential with securing financing. So to ensure you have a good bank rating, you got to keep your bank account average over 3 months as high as you can, preferably over 10 grand. You want to ensure your account doesn't go negative and you don't incur any NSF charges, as that will destroy your rating. You want to take advantage of and use other services the bank offers, such as CDs, savings accounts, other incentives and accounts. You want to open your bank account when your corporation starts and leave it open, as this longevity will help your bank rating. Make consistent deposits on a regular basis and ensure that each month you have good positive cash flow through your bank account by regularly putting into the account more money than you're actually taking out. So taking these steps will ensure you have an exceptional bank rating. And an exceptional bank rating means your business will have a greater chance of being approved for bank financing, including loans, credit lines, and credit cards. So let me take a look at the actual CreditSuite. What I'm going to do right now is I'm going to take an opportunity to actually show you our actual CreditSuite. Now, where this is going to help you is a couple different things. First of all, if you've never actually seen our CreditSuite before, this might be eye-opening. This is unlike anything else that's out there today. If I could type my password in correctly, and it's a turnkey solution where you're able to basically come in and offer business credit and funding for your clients. Now, I want to walk through and show you this because a lot of people on the call haven't seen this yet. I'm going to talk to you about the power of it. It'll give you the ability to offer business credit funding for your clients, but I'm also going to walk through this and show you something I've never shown before, ever, in any presentation, on any webinar, and it's how you could use the system to actually build a solid high 5 bank rating. Okay, and we're going to show you some integral stuff here, because not only can you do it through the system, you can also see how we're doing it through the funding suite or through the actual funding and credit suite, and figure out how to do it for yourself or for your customers. So that being said, if you've never actually seen the actual credit suite before, this is our actual credit suite. Let me kind of give you a background. Most of our clients are credit repair companies, accountants typically, and all our clients have come to us and said, look, here's the deal. People want to know about business credit. I mean, everybody keeps asking about business credit. What's it about? Can you roll out a solution? So as a company, we started looking at a solution to give to our clients where they could offer business credit. But we had a couple major roadblocks. The first roadblock was if our clients didn't want to learn a whole new industry, and that's what they basically were going to have to do, because business credit was a whole nother industry, and knowing the creditors and who reports to who and how to get approved and all these things that are involved is way above what most people's knowledge base is. So they didn't know how to do it. Most people didn't want to dedicate the time to doing it. So what we did was we turned around and created a turnkey system that our clients could just simply sell. You make the sale, you step out, and you're all done. Now, the best part about this is our clients are making $2,000 to $3,000 in profit just for making the sale. And after the sale is made, our business credit coaches, funding advisors take over and help the client with all aspects of building business credit. At the same time, we decided to fix the biggest problem business credit has. Yes, business credit has a real big problem. And the big problem is time. You see, everybody loves the idea of business credit. Who wouldn't? Right? You get money with no liability. Who wouldn't want to get money with no personal liability? Everybody wants it. But people don't want to wait the time to build it. And if you go to creditmakeover.biz or any of the business credit companies out there, you'll see that in their FAQs and on their website, they'll commonly tell you it takes 9 to 12 months to build the credit. Period. It's a year process. Now, we live in an instant gratification society. People want money and they want it right away. And that's the problem with business credit. People don't go for business credit because it takes them too long to get their money. So while we were designing a turnkey solution for our clients to sell business credit, we thought we'd go ahead and fix that problem too. So we created something known as the CreditSuite. And this suite is the most comprehensive funding solution in the world today. Matter of fact, it's the only system in the world that does something that's very powerful. It combines business credit building with funding. It's brilliant. So the first thing we do with this system is we get clients money. We get them a lot of money right away. In the first month, they get the system, even if they're a startup business, even if they have credit challenges. Okay, then we help them begin the process of building business credit. So they get the business credit, the money with no liability that everybody wants, But they're patient in doing so and building their business credit because we also gave them what they really want, which is money. We give them money, they're patient, they're happy, then we begin the process of building business credit. It's really quite brilliant. And setting up their corporation correctly, getting bank ratings, all those things we also cover all through the system. And again, the best part is you don't do anything. You just make a sale, step out, and all the rest of it's done for you. So I won't spend a ton of time today, but I do want to spend some time running through and actually showing you the funding suite, especially for those of you that have never seen it, and then jump into this bank rating section that nobody on here, I think, has actually seen. So the funding suite actually comes like this. Your logo is up here. It's all branded in your name. This is the client's name. Little tips about the step that they're in. This is a description of the step that they're in. We have a 6-step process to building business credit and getting funding. I'm going to walk you through all 6 steps. Down here, they can get details of the steps that they're on. And then here, we actually put all the funding programs that they actually qualify for. So all of the funding that they're actually going to be able to get approved for, we put right here, and they can access that funding right here. So the first thing a client's going to do when you make the sale, and you say, hey, client wants money, client wants business credit, you sell the system, they get access. The very first thing they're going to do is start in step 1, foundation. And the first thing we do is walk them through a 20-point compliance checklist, okay, to help them understand what banks are looking for so they can get approved. My word for this is brilliant. Think about it. In your life, your entire lifetime, how many times have you ever applied for money? And when you applied, the person said, let me tell you exactly what we're looking for. We're looking for this, 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 this. Make sure you do this. Make sure you're set up this way before you even applied. Most people, it rarely ever happens. They apply, they get denied, they never know why. Nobody ever sits with them before they apply and actually explains to them what the lender's actually looking for. But that's what we're doing here. In step 1, what we're doing is having the client fill out an application. Are you an LLC? Are you a C Corp? Where are you incorporated? But our application's unlike any other application most clients have ever seen because we're actually explaining what the lender's actually looking for. So instead of just asking for a true business address, we explain to them, look, the lender wants to see a real physical address. If you don't have one, we even offer them a solution, like a virtual address solution. So if they don't meet the criteria in step 1, in one click, they can go to a company that can help get them set up with a virtual address or a phone number, or fax number, whatever that they may need. Okay, now we even have the same technology lenders use. Check this out. Here's a phone number, bad prefix. It'll tell me landline, home phone, cell phone, business address. Is it a real business? Is it a home address? The system has the same series of checks that a lender is going to look for because, again, our philosophy is pretty simple. Let's make sure these people qualify before they even apply. That way they have the best chance of getting approved. Look, 95% of people that get denied bank financing get turned down for one of these reasons, and no one ever tells them why. That means for the rest of their life, they continue to get turned down, and they never know the underlying reason why. What we're doing here is explaining exactly what the lender's looking for, helping them meet those criteria. If they don't have a phone number, if they don't have a fax number, we help connect them to a source that'll get it. Now, some of it's free. 411. Well, it doesn't cost us any money to list them with 411, so we do it for the client for free. Okay, but some things like a phone number, a fax number, well, they're going to have to pay for that. So what we've done is negotiate the rate down with these companies. So they're pretty much going to get a wholesale rate they wouldn't get anywhere else. And they'll go to a main company like RingCentral, GoDaddy. So we're putting them with a top company in their field. And again, we've already negotiated a wholesale rate. They can go anywhere they want, but the beauty of this is that if you have somebody that's starting a brand new business, through our system, they literally could set up their entire business. They could set up their business name, their licensing, their website, their phone number, their fax number, their address, everything right through here. If you have an existing business owner, they're going to fly through step 1 because they already have their licensing. They already have an EIN number. They're just going to be flying through step 1 because they already meet most of that criteria. Okay, we even set them up with merchant account processing if they need that. Make sure that their licensing is in line with what the lenders are looking for. So again, all aspects of what a lender reviews on the application, we walk the client through in this 20-point secret basic foundation review we do for the client. Now again, remember, This isn't the client just going through this, doing it on her own. Okay, this system is the only system in the world that has certified business credit coaches. They go through rigorous training and certification. They are the most knowledgeable people you'll ever run into about business credit. They make me look like an idiot with business credit. These people, they're so highly educated. And what they do is they work with your clients one-on-one, hold their hand through the entire business credit building process. Okay, so you make the sale, the business credit coach takes over, and they help the client through the whole process, because we want your client to work with somebody that all they do is deal with Dun & Bradstreet, Equifax, Experian, business credit building all day long. So they're the best equipped knowledge-wise to help the client. So your clients have access to certified business credit coaches that help them through this entire system. Now in step 2, what we're going to do is exactly what I told you that separates us from every other company in existence. You know, our new funding advisor, Dex, starts with us this month. And he called me last week and he said, man, because I've been looking at everything, and I've been looking everywhere for everything. I've been looking everywhere for our products. I've been looking at all lenders. I've called all the major conventional banks to ask what they do. And I've come to a conclusion. And I said, okay, what's your conclusion? He said, we have no competition. And I laughed and I said, yeah, I'm glad you agree with me there. And he said, no, really. There's nobody out there that does what we do. Nobody. I mean, you've got some companies that build business credit. They don't deal with funding. It takes them a year to get money. You deal with some companies that deal with some funding products, but nobody that deals with the volume we deal, nobody that deals with this many sources, nobody that deals with business credit funding. He goes, it's really amazing. And then he was obviously very excited. That is the reality of what we have. Nobody has what we have, because what we've done is take technology and got it to do what humans can't do. See, through our system, we've taken over 2,100 lenders, thousands of banks, put in their underwriting guidelines. And what the system will actually do is get a business information and will cross-check it against underwriting guidelines for these thousands of institutions, and will then render a decision of all of the funding programs that that business will qualify for. Now, the brilliance of this is having so much access to multiple funding programs and so many sources allows us an opportunity to get many people approved when banks simply can't. Okay, everybody knows banks pretty much deal with SBA type funding, which means it's got to be full doc. The business has to be in business 3 years. Okay, they need 3 years of financials. They need tax returns, personal and business. They need personal and business financials, personal financials for everybody that owns more than 20%. They need business plans. They need resumes. They need P&L statements. Personal credit, business credit needs to be exceptional. All of that, or somebody doesn't get a bank loan. It's why so few people ever get approved for bank loans. I mean, think about it. You know, I bet you could count on less than one finger or less, how many people you've ever really met in your life who've actually went into a bank and got a good loan for their business. I mean, it rarely happens. You maybe have never ever talked to somebody that did it, because bank standards are so rigid. Okay, what we do is we lend money to a business based on the strengths of the business. Again, I call it brilliant. Meaning, let's say you are a, florist, and your strength is that you have consistent revenue and credit card sales. I don't care if you've been open for a year, we could get you $250,000. Because what we'll do is we've got programs that'll just look at your merchant account statements, just look at your bank account statements, and we'll lend you money just based on that. They don't need P&L and blah, 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 blah. They just need one thing. Boom, you're approved. If you have purchase orders, if you have account receivables, if you have inventory, if the business owner has 401ks, has stocks, has equipment, has credit card sales, consistent cash flow, any of those things could be used as collateral to get them money. And they can get money with bad credit. Boom. Something no conventional bank will tell you. No conventional bank will tell you they lend to people with credit problems. Okay, but the system does. What the system will do is look at the strength of a business. Here's a business owner. His credit's 520 credit score. He's had a lot of problems, okay? But he's got consistent revenue through his business. He has money going through his bank accounts every month and no NSFs. Okay, we're going to lend that person up to $150,000 just because they do consistent revenue. Let's say in the same circumstance that it's a manufacturing company and they have inventory, they have equipment, they have purchase orders or receivables. They can get money advanced against all of those actual collateral, those business assets, even if they have horrible credit. 400 credit scores, we can still get account receivable factoring done. Okay, and We even have unsecured credit cards for brand new startup businesses. So let's say you meet somebody that says, I want to start a business. We can give that person up to $150,000 in unsecured credit cards, even if they haven't started the business, even as a brand new business. Walk into your bank and try that, right? They laugh you. They laugh all the way they laugh you all. I'd say laugh all the way to the bank, but they are the bank. So the bottom line is that if you've ever tried to walk into a bank and get financing, you know it's very tough. And if you've ever looked outside of a bank, where do you look? I mean, there's not a lot of other products readily available out there that you're going to find that for business owners that haven't been in business 3 years with positive financials. Through our system, we have all that. We get them money. Okay, even if they do have bad credit, even if they are a startup business. So in step 2, what we do is we actually walk them through. Now I'm going to show you something here. We actually walk them through. We take this information, we cross-check it against these underwriting guidelines, and then it renders a decision of all the funding programs that client's actually going to qualify for. All these funding programs. In one click, they can open up a description of the program. It's audio and written. They can proceed to the application. Here's another benefit of the system. All the data auto-populates onto the application. Okay, and in one click, they hit submit. This actually goes to their own certified funding advisor. So not only do they have a business credit coach, but we have so much funding they can qualify for that we have a certified funding advisor to help them navigate that funding. And we even have niche funding. We have funding for commercial real estate. We have funding to help them with rehab properties. Okay, we have financing to get them commercial signage, to get them commercial wraps for vehicles, to get vehicle leasing in the business name. All of those things are available in step 2. Now, something else that's available in step 2 that I've never shown before is something called bank ratings. Maybe you've heard of them. That's right. In our system, we actually go through, educate clients on what bank ratings are, how they work. We basically list the entire bank rating scale, the balances they need to have. We explain the components of the bank ratings. We even ask them, hey, how much do you have in your bank account the last 3 months? So our team can help work with them on this. Then we do what we call obtaining your first business loan is like finding the Holy Grail. Because it is. Getting your first business loan through a bank is near impossible to do. And that's what we help them do. We help them do it by getting them with a bank or introducing them to a program where they could put money into an actual CD. Okay, so it's into a CD account at an SBA preferred lending bank. Okay, so this isn't just our idea of something that might work. This is an official program that can be done at any SBA preferred lending bank. Okay, once they do this and they open up this CD program, and here's some of the banks that'll deal with these CD programs. This isn't all of them, but this is some of them: SunTrust, Chase, Capital One. Okay, and we give description of every one, what they're looking for. Okay, so Capital One requires a very simple business loan application if you're looking for a CD, secured business loan under $50,000. So these are secured CDs. So you're pretty much going to get approved, and we'll even list the underwriting guidelines so that person can know they're going to get approved right here and get their bank rating set up. So through these CD loans, which is something you could do for your clients or we do for clients right through the system, this gets them money. Remember, on top of just the bank account, another way to build a high bank rating is to have other loans, other financial products. So these CD loans are fantastic. By creating these CD loans, we help them instantly establish an excellent business bank rating, especially if they have higher balances in their account, and then that helps them immediately turn around and get approved for their first bank loan. I mean, we can get them approved for their first bank loan pretty quickly, whereas most businesses will spend years trying to accomplish that. Okay, so that's something else we do for them in step 2 outside of getting them money. And then once we get them money in step 2, now they're happy. So then we begin the process of building business credit. First, we get them access to their business credit reports. So right in step 3, what they're going to do is they're going to set up their Experience Smart Business data. This will tell them how many trade lines they have a credit profile, score, and inquiries, and all that's free. That means for free, through the system, for a year, they can monitor their Experience Smart Business data and not pay anything. It's free. Okay, that would cost them about $600 to $1,200 with Experian directly. Anybody that buys the actual CreditSuite, it's part of it. Okay, they can also get enrolled for full monitoring with Equifax, Experian, and Dun & Bradstreet, but they got to pay for that. If they want the full monitoring, they have to pay for that. But again, they don't need it. Our system is designed to give them everything they need without paying for any of it. So they get Experian Smart Business to monitor their Experian reports at no cost. They also get a DUNS number at no cost. call Dun & Bradstreet when we're done with this call and ask them that question. How much is it for my DUNS number? They'll tell you $699 for your activation of your credit profile and your DUNS number. So that's about $700 worth of stuff they're getting for free from Dun & Bradstreet, another $600 to $1,000 from Experian. So they're easily getting $1,200 to $1,500 of stuff from the bureaus right through our system at no cost. And did I mention we're the only company in the world that the bureaus do this with? Talk about credibility, right? We have the only system in the world that the bureaus are part of. They live data stream privileged credit data into, that they give away free stuff that they don't give anywhere. They only do it for us. Okay, they only do it as part of the CreditSuite. So it really goes to show you the actual credibility of the system. And then once the clients actually build their or actually get their business credit reports or access to them, then we begin the process of building business credit. And the first thing we do is help them get 5 vendor accounts. These are just creditors that will approve almost any business and that do report to the business credit reporting agencies. So we help them get approved with accounts that do report, and then that way they only need 5 of these accounts to have a full business credit profile and score established. It's not difficult. The difficult part is knowing this. Most people don't know who offers startup business credit. We have a few sources here. I say a few, but in reality we have over 50 vendors to choose from. They only need 5. So it's pretty easy for them to find an abundance of sources they will use. All the ones on this first page work for a brand new business and a lot more. So a lot of them work for a brand new startup business. And we do something no other business credit building company does. We actually give the underwriting guidelines for each institution. Ladies and gentlemen, this is what happens when you are the only person on the planet that has this relationship with Dun & Bradstreet. See, we're blessed enough to have the relationship we have where D&B tells us all the people that reports to them and their guidelines. We're the only ones that they do that with. So as a result, we're able to actually list the underwriting guidelines here. So think about this. Now we set the business up in step 1 to make sure they're going to get approved. Now we're exposing them to sources and actually explaining the underwriting guidelines before they even apply to increase their chances of getting approved. And again, there's a lot of sources that they're easily going to be able to work with, do business with. Tiger Direct, Mauser Electronics, Radio Shack, Sprint. Some of these are companies you've heard of. Some of them are ones you haven't. Quill, Staples, Print Country. All of these are accounts they can use to get started with their business credit. Okay, and again, another brilliance of the system is that you can actually come here and in one click they could sign up online and all their data auto-populates. I love this system. It's so awesome. So look at how much time that saves somebody, right? They don't need to keep filling out these applications. In one click, they can sign up online. The application automatically auto-populates. And then in step 5, we get to the business credit reward, which is where we get them into store credit, Visa, MasterCard, Staples, Office Depot, Shell, Home Depot, Lowe's, Sears, Walmart, Costco, Amazon, Dell, $10,000 accounts. These are credit they're going to get in their business name with no personal credit check and no personal liability. Okay, I mean, some of them have personal guarantee, some of them don't. But a lot of them are no personal credit check, a lot of them are no personal guarantee. So in step 5, this is what they get. Sam's Club. These are all just credit cards. MasterCard. So in step 5, they actually get the revolving credit. And then in step 6, we bring them back to funding. Now that we've built the business credit, now we can bring them back to some of the funding programs because now they can qualify for even more of that funding without a personal guarantee. So that's the actual CreditSuite, the most comprehensive funding solution available in the world today. Only system with certified business credit coaches and funding advisors. Has more, only system that combines business credit and funding. And something I didn't, only system with certified business credit coaches, funding advisors, not sure if I just said that. And also it comes with a $50,000 guarantee. So all of your clients, we guarantee they'll be approved for at least $50,000 in business credit or funding. So currently our clients are selling this for $2,500 to $3,500. You pay only $700 per funding suite you activate, and that's charged 3 days after you set it up. So you know you're cash flowing. You know, somebody gives you $3,000, you put it in the bank, 3 days later you're charged the $700. So our clients are netting $2,000 to $3,000 in profit, meaning they're making massive returns. You can charge up front. You can market across state lines. There's no additional regulations. There's no federal requirements. There's no CROA. Everything our clients don't like about some industries like credit repair doesn't apply to business credit, especially having the ability to charge up front. Plus, we give you everything you need to be successful. We give you 6 months email content, social media content, done-for-you webinars, videos, press releases, articles, free reports, ebooks, websites, squeeze page websites, seminars, training for your sales team, everything. So to learn more, go to businesscreditexpert.com. Okay, businesscreditexpert.com. If you go to businesscreditexpert.com, it's going to give you the 3 enrollment plans. You're going to see a side-by-side comparison of the 3 different enrollment plans. You will see what comes with each plan. All you have to do is actually enter your first name and email, and then you go to a page where you can see side-by-side what comes with each plan. There's even a video that plays to actually show you what comes with each plan, show you what the email content, the websites, all that you get. So go to businesscreditexpert.com. You can check that out, learn more about getting started. Again, our clients right now, let me put it this way, 3 sales a month pays you almost $10,000 a month. If you're making 3 sales a month, you're doing about $9,000 in sales per month. So that's it. Doesn't take a lot to make a lot with business credit. So go to businesscreditexpert.com. That'll give you some info to learn more. Okay. So I'm going to go ahead and I'm going to answer maybe 3 or 4 questions. That's it. I actually have another webinar at 3 in about 4 minutes. So I'm going to have to jump off and go to. So I'm going to answer maybe a few questions. I'm going to wrap this up. You report to the 3 credit reporting agencies. That's great. Go ahead and let me know. Go ahead and send me an email. My email is ty@disputesweet.com. On that, Adam, and then we can maybe talk a little bit more about that. And D&B as well. So go ahead and send me some email and we can talk a little bit more about that. And it looks like all these I think are coming from you. Okay, so go ahead and get with me more on that and we'll go from there. So that being said, I will go ahead. I don't have really any other questions. If you have any questions, let me know. Here's my number, 877-600-2487. My email is ty@disputesweet.com. You go to businesscreditexpert.com to get more info. Look, this changed my life. Okay, I was a credit repair business doing pretty well. I incorporated business credit with my services. I doubled the size of my business, doubled my credit repair, brought in significant more revenue, found an easy way to advertise and market to bring in business credit and credit repair customers. And it changed me so much to a point that in a year with business credit, I was able to turn around and sell my business for a very large profit. And I can tell you again that, our clients that are doing 3 sales a month are making almost $10,000 a month with business credit. The ones that are doing 5 sales a month are making almost 15. And our top sellers right now are doing over 20 sales a month with business credit. That's about $60,000 plus a month. And it took them a few months to get there. But in the training, we give you so much ridiculous training and marketing materials. We give you done-for-you seminars. We explain all aspects of hosting seminars, how to be successful, all aspects of making cold calls, all aspects of doing everything. So not only do we give you the product to sell, you also get your own funding suite with your enrollment. So the same system you just saw that you're going to turn around and charge clients $2,500 to $3,500, you're getting with your own enrollment. You get your own funding suite, $2,000 to $3,000. Okay, then you also become a reseller, plus you get everything you need to market it, sell it, and training, everything you need. I'll be working with you one-on-one. Okay, I'll be sending you emails every few days. You have step-by-step self-paced training. It takes about 3 hours of initial training to make your first sale, and then 40, 50, 60 hours of additional training. The webinar I'm going into 3 is another webinar that we do for our actual training. So it's a really good opportunity. If you're interested, please give me a call. Let me know. Send me an email. And everybody, go check out businesscreditexpert.com. It's definitely worth your time to run there and check it out. Okay, so I'm going to go ahead and wrap this up. I don't really have any time for more questions. If you do have any other questions, send me an email, give me a call, let me know. I've got to jump into this other 3 o'clock webinar. But again, I really want to thank everybody for attending today. If you do have any other questions, anything I can help with on the business credit, please give me a call, send me an email, let me know. Thanks, everybody.